And we're just going to dive straight into yesterday's events, the speech from the president of Ukraine, and also the FOMC events that took place last night. So the speech was at 5 p.m. yesterday, or 1700 hours, for those who like that format. Then, these FOMC events were at 9 p.m. Our time, or 2100 hours. So we're going to be looking at that right now. So first of all, looking at yesterday's economic calendar, the the interest rate decision for the for the Federal Reserve, it didn't really change. Sorry, it changed from 0.25% to 0.5%. That was the statistics that came out at 9 p.m. last night. So the speech at 5 p.m. This is the market impact. So this is the Euro USD that I'm going to use. The impacted charts were mainly Euro USD. For the euro and the pound, because these are the countries that were really greatly affected, and they also intersect with the charts that we commonly trade. So the market impact on these ones is it's sort of a primary focus for us. So yesterday at 5 p.m. on the Euro USD, so there was that first bearish move. The market was generally bullish, but you can see this impact. You can see the impact and the number of pips that were there between the open and close. Between the open and close on that bullish candlestick were about 16 pips. 16 pips in that hour. The open and the close. The total number of pips, given the volatility of the event, the speech from the Ukrainian president, the total number of pips was about 53 pips total. So there are just 16 pips between the opening and the close. Then between the high and the low, there are about 52 pips. So there was a lot of movement within 1 hour. So there is a lot that you could have done within that 1 hour if you are really scalping, and maybe in the 5-minute chart you had so many candlesticks to take advantage of. If you scalp in the 1-minute chart, if you have a very tight spread, then you could have taken advantage of this in so many ways. Then later on, the FOMC minutes, that was at 9 p.m. Last night. This one, there was very good market impact, very, very good market. So the candlestick that was impacted between the opening and the close, it had about 18 pips between the open and the close. Then in between the high and the low, there are about 59 pips. So for this candlestick as well, that was a direct impact of the FOMC minutes. If you took it for another hour, if you opened there, this blowback went about 32 pips. If you had a very high lot size, you could have got knocked out there. It's very, very possible. But if you stayed within the market for some time, there are about 62 pips there. Then that retracement to another 70, to that 70 pips there, and maybe you could have got out. But all this was, this was a very good, the impact was very good from the FOMC minutes. So that's what happened on the Euro USD. On the GBP USD, looking at the same time effect from the speech, this candlestick here is what had the market impact from the speech of the president of Ukraine. So there are 16 pips in the body of the candlestick. That is the high and the low. Sorry, that is the open and the close. Then from the high and the low, there are about 41 pips. That was just from the president of of Ukraine. So There was a lot of market movement in the very, very small time frames. Very nice for scalping. Then later on, the FOMC minutes event, yeah, because there's a US dollar, this is GBP USD, so the market impact is very visible here as well. From the open to the close, about 29 pips. Yeah, 29 pips maximum. Then from the high point to the low point, this one has many, they're about 82 pips. Yeah, so the impact, if you bought exactly at the time, because you saw the interest, once you see the statistics, this one here, which was previously 0.25%, now it comes out as 0.5%. You're forced to buy. So once you buy, and in that position, the market can first take you for a ride. That is a negative of 42 pips. Yeah, negative of 42 pips. That is quite, let's first calculate that. So 42 with another 0 times maybe your lot size of 0.5. That is $210 negative. Yeah, so that one can really scare you. But then, yeah, in the positive end, you can get up to around, with this retracement considered, you can get about 70 pips. So 42 pips give you that scare of negative $210 on your account. Then the 70 pips, so another 0 times 0.5, when the market moves in your opposite in that direction, you get about $350 from the same move. So if your lot size is too high, that can easily knock you out. The volatility will definitely knock you out. Those are so many pips, 42 pips. There are so many pips, and you can imagine how rapid that was. And so the rise happens, and it takes some time. About 2 hours, you collect some money from there. If you stay within stubbornly up to now, you even have more money, about 90 pips. About 90 pips from yesterday up to today. And yeah, so these other charts that we really equate to the FOMC is the XAU USD. Yeah, that is gold. So this was the market impact of gold. If you look at the gold chart, it was bearish for some long time. Very, very bearish since the beginning of the month, at around 8th anyway. And yesterday we have what looks like some kind of a reversal, and with the help of that event, if you look at the RSI, we have some kind of a perfect divergence. We have the lows moving upwards, and that is on the RSI, and we have the lows on the actual chart moving downwards. So we have, there was some kind of a perfect divergence taking place there. And yeah, so the real market impact here, the real bullish move, actually came from the FOMC minutes. It first took it very low, and gold is a very heavy chart. So this one here went low by 126 pips. Yeah, it first fakes you there, 126 pips plus another 0 times the 0.5 lot size we're looking at. That's about a negative $630 with a 0.5 lot size. Yeah, so that's what happened with FOMC minutes last night. So if you see it going down and you decide to sell with it, you know exactly what happens there. So if you bought at that time after seeing the rate increasing, then it was about to where the price is earlier on today, about 287 pips on gold. So 287 plus another 0 times the 0.5 lot size, that's about $1,435. So gold definitely wins when it comes to giving money. Yeah, it definitely wins, and when it comes to taking money, it even more than wins. It is when it comes to taking money, it is thorough, but the rewards are very, very nice. So yeah, so the divergence was already there from the past. You could be waiting for some kind of some kind of movement to show you that the prices are going bullish, and it happened with the FOMC minutes. Maybe this upward movement will continue. If that is really a reversal, we can take this point from the body when it started falling to this one here, and yeah, so prices are fairly below the 23.6. If this trend continues upwards, then we can look at breaking this price, this retracement level to 38.2 to 50.0. The pips in there to the 38.2 are about 298 pips. To the 50.0, they're about 476 pips, and to the 61.8, 660, about 650 pips minimum to the 61.8. These Fibonacci retracement levels, we can look for some points of significance in the past. Let's see if we take it from the highest point, the very highest point there on the chart, and see how we can make it significant. So we have it at the highest point. So looking at the previous price movements, there is some support there, some support, resistance there. Yeah, so price was actually somehow relevant. So gold is a very funny chart. Sometimes it moves exactly how you want it to move, then other times you have to do exactly what it dictates, because gold is not a country, it's not some kind of company. Gold is worldwide. It's a metal that is literally everywhere. So what impacts gold is quite, it's something very strange to follow up. So yeah, that's what we have for gold. So looking at yesterday's, the analysis we have been doing over some time, the USD CHF chart, yesterday we were looking to buy to the 50.0, and we have the prices actually, they are pushing it there. This one here is in a weekly chart, so this week has begun and it has really pushed above these lines, and yeah, we're looking forward to that 50.0. Yeah, if we get there, the pips left are about 100 pips to the 50.0 from where the price is right now. So it's quite, it's very long term, but this kind of trades really help to keep you sane. Yeah, they really keep you sane. If you if you expect some short-term profits from such trades, then it can be very, very stressful because it's in a weekly chart. So this one, we're still following it up. We're going to keep it there for quite some time. Brent crude oil is, it is there resting at 1.02. The speech from the president of Ukraine, the speech was very positive, so we don't have some drastic price movements here. Yeah, things are somehow back to a new normal. Yeah, not back to the normal, but the new normal, and we just have to take it like that. Okay, so looking at this, the Elliott wave theory that we're applying here for this Euro USD. Yeah, so it's not yet. Okay, I think we have some kind of a reversal there. It was moving on so well, but I think it's almost time that we consider phasing out this this particular Elliott waves from this chart, because yeah, they have played their part towards the end here. We haven't really had a perfect fifth wave. We don't even really have a fifth wave there, and that's really okay. Yeah, that's very okay. So we can take what we have, or we can apply, more. The Elliott wave theory has a lot of so many branches that we can venture into and make sense of what's happening right now. So shall do that tomorrow, and yeah, you will learn about the Elliott waves. You learn about the Elliott waves one way or another. It's a very complex method, but it's very, very effective. You've seen the effectiveness over the past few weeks. we've been following that very pattern, and we're expecting that very stiff rise, and we had that stiff rise, which is good. It's very good for us. So when it starts happening again, then you will have some guidance through these patterns. So the price doesn't really move according to the Elliott waves, but the Elliott waves help you to understand how price is moving at that particular time. So price doesn't move in a certain way because of price action, because of divergence, because of a trend line, because of an Elliott wave. No, these methods just help us to understand why price is moving the way it is, and when you understand why it is moving like that, then we can project certain areas where we can put our take profit and get some money like that. If it's in a small time frame, we collect small money. If it's in a bigger time frame, we get some good cash out of it. So that's the importance of these methods of analysis. They are so important. Do not take them for granted. Naked trading is tough. If you do naked trading and you're very proud of it, you need to go a step higher and do tape reading, and there you'll be very proud of yourself. You just look at the ticker tape running with all those prices changing, and you make your decision from there. If you're successful, you can really brag about it. If you're not, it will really piss you off. But you may not need a tape of about, okay, the prices these days change very rapidly. So you can give it the best that you can and see how to proceed. So let's take a look at some other charts, a few more charts, and charts we've been looking at previously. This is a daily chart. These are the long-term charts we've been looking at, and it looks like for this one here, this 50.0 in the Fibonacci retracement level, together with all these other points of resistance, price has seriously been resisted at that 50.0 Fibonacci mark. And but we are still, there's still a trend that is being followed with these prices. So that blue line represents the trend. Price has been moving, following that trend in the daily chart. And if it breaks below that blue line, then we're going to have a downward trend. This one is this is a long-term chart. It's a daily chart. So maybe next week, towards the end of next week, shall keep looking at this, just in case we're in some kind of, actually we're actually in a triangle. If I add this other line, this red line, let me make it blue as well, so that we have these blue lines squeezing in on the price. Okay, so we have this blue line with this, this very strong resistance, and then we have the flexible, the diagonal blue line that is giving us this kind of triangle. So price is being squeezed in between these two, with the resistance up there and the support down there, and the breakout either way will give us a very nice price movement. So if it breaks up above, we can trade to the 61.8 retracement level, which has about 76 pips. That's a good number of pips. So if it breaks above, we can collect that number of pips. If it breaks below, then we shall wait for it to test this level again, and then we shall have our funds giving us some areas of support and resistance. Okay, Bitcoin is now at $40,000. Not so bad. $40,546. It has been really sluggish behind there. This one here is a daily chart. Yesterday there was a big rise from about $39,000 to about $41,000, and it's now inside there. So there is hope. This kind of range market. If you bought Bitcoin and it was up here at the very top, there is some hope here that prices could be moving back upwards sometime soon. Okay. This one is the Australian dollar versus the Japanese yen. We now have an overbought position there. Price has moved up into that position. So here we start stocking this chart. And the good thing, it's a 1 hour chart. So we can stock it We're going to have so many candlesticks today and tomorrow, and those candlesticks will give us another high point. So this is our high. The price is overbought. Sorry, the RSI is overbought, and the price is high enough, so we have a good high point there. If we get a higher point with lower strength, then we shall have a good recipe for some kind of divergence there, which is good. And these are bigger time frames. It's it's very, very bullish. It's very bullish. So we can look for some retracements there. We can get some retracements right now. Where to get another high point? Shall have price breaking that, breaking above there. So once price breaks above that level there, we shall be moving to our new high point, and if the strength is low, then it will be a very good recipe for divergence. So let's just take a very brief look at all these other charts. This is GBP, the pound sterling versus the Australian dollar. The retracement has actually played out so well. We're looking at price coming from an oversold position in the RSI, and we have a very nice retracement there. It's a daily chart, so that one there we can look at it on Monday. USD JPY, it's even more bullish than it was yesterday. Very interesting chart. Very, very bullish. So this one, it's really out of the territory of so many people, and the price is above so many high points. It's now at this highest point, and the price movement is very, very stiff. So that one, we shall look at it in a very special way. Euro USD, we've just looked at it. GBP USD, so for these ones, keep in mind the events that are taking place today. The market impact is really, really going to be something else. So I think that's our last chart for today. So if you're learning how to trade, if you're learning how to invest in the financial markets, if you can't do it on your own, look for someone. There are so many people who are there who are going to help you, and we shall also have a program here that's going to help you to understand these things. Learning is just the first stage. What we do after learning is what actually matters. So when you understand what happens in the financial markets, you will know how to invest and what to expect. If your expectations are very low, then your expectations will go very, very high when you understand exactly how it all works, and how it benefits you, how it benefits the community, how it benefits the country, and how it benefits your children in the future. So there are so many benefits from the financial markets. The very volatile markets, we've been looking at them, and so many people know how these markets actually work, and how you can make money and how you can lose money if you're not very careful with your decisions. So the less volatile markets, the risk is normally very low, and that is where you get your passive income that can help you to fund so many things that you're going to invest in a risky way. So when you get some small money from the interest you get from what you deposited on maybe some bonds or some stock, then you can get that cash and grow it and keep on growing your portfolio on the other side. So when you give it some time, you have to look at things in an annual way. You can't look at things and expect some results in a month, in a week. You have to look at maybe quarter of a year, half a year, maybe a whole year. That's how you plan. That's the best way of planning with these big time frames. It's much more effective than a short-term plan. So we shall be looking at so many of those factors that that will be affecting you in these financial markets. Whether you invest or participate or not, you're very much part of these markets. So thank you for watching. Have a good day. Goodbye.